MMTs during the current bull rally that we called back in October is I'm only going to blow up this part of the weekly chart because this is the most significant area that when we had the double weekly pullback here to 1200 handle, here's that support level right here. I'm going to draw a horizontal trend line over here. Now, when we had part of the European contagion going, is that in this pullback that we had a long weekly consolidation over here on the S&P once it started making its movement. This is that 1200 neckline. This is that 1215 pullback low, or you can call it the 1220 neckline. This is going to be, this area is that major support area. However, last week, during that 5-day period, we had the Europe part come in, and we're right up here. I'm going to go, once again, the bull rally is still in play, and I can tell you slightly why, is that from a standard point of view, the 20-week moving average crossed over the 100-week. That's bullish because it hasn't done that in a long, long, long time. The 10-week moving average, which is a blue line, which this weekly bar is sitting on top of support, and that 10-week moving average is 1251.87. As long as we consolidate above that area and make higher highs into the 200-week moving average, that's this green line, that's this right here, that reading for everyone is 1273.19. That will be that resistance level. This is where that we had actually, for the first time, came back up here. We made that high on that S&P. We made that high on this S&P over here. And this bar and this bar is the major top of the resistance level, so you know. When we got there, we still had the big Europe problem and the financial crisis over there blooming on that 2-week pullback from this consolidation weekly high to that breakout. Now, having said that on the S&P, is that it's very important to understand that from the very bottom that we called for the big bull rally, most bulls have not been involved. They're too terrified and they're on the sideline. Okay, I'm going to show you this right here. That's that 10-week moving average. We've been above, the daily moving average. I'm showing it on a daily. I'm sorry. These are daily moving averages. I correct myself. But I will show the weekly. The rising 10-day has been holding that support level. And this 3-day, 1-day top right up here, this is where this daily rally had come from. Once we got up above here, and it's a daily chart, S&P 500. Daily simple moving average, daily simple moving average. I correct myself because I'm going to show a weekly. And so the daily's in front of here, and you have a rising 20 above it. You've got this area right here where this was the Europe markdown last week, Monday and Tuesday. Wednesday they come in, Thursday, and then here's Friday's daily consolidation. The 200-day moving average will remain up there at 1273. That will be the short-term resistance. Once we take that out and we can consolidate above it, we would be setting up a new daily bull trend, meaning that the sell downs that have happened in a calendar year, with all the declining moving averages going down, they're now flattening out on the daily and they're coming up. So we're going to be watching this resistance area. This is going to be the major neckline on the daily. Now, having said that, I will find a weekly. The weekly S&P, you can see here how we had acted in 2011. And we drew these lower trend lines because when we got down here, these were the tops of the calendar year. And as we started bending, we bent all right. We called that big short here. Okay. And we peaked at the first intraday yearly high, weekly high, another weekly high from the pullbacks, as I should do, another high that came in from the original reversal, and then right down here to the very bottom. And we are telling people that this bull counter rally that we have is looking quite well here for a couple of reasons. Number one, when we got to the major, and this is weekly now, everybody, let's make sure, S&P 500 weekly chart. that 50-week moving average. That's this one. That one's above it. We got above it. That was good because we were traveling up to the 1300 handle, which is going to be right here. This is going to be this long-term neckline. When we shorted this thing down back in the summertime, when it broke that 1300, that was our first lows in there, but we did break it. So here, let me take out some of these trend lines. Let's recap it. This area right there is going to be the wall of resistance as it was. This was the weekly last week's, and we're at a double weekly top. You got the body back above the 50-week moving average. You've got 1 week, 2 weeks, 3 weeks, 4 weeks above this 10-week moving average. That goes from a bear trend to a bull trend, buy side, sell side market. And as long as I can continue to close above the bull weekly moving average up here, meaning that my neckline on the lower end is going to be ultimately right there. That's going to be my lower neckline. These little resistance areas is where we got above this weekly major horizontal resistance line. Now, having said that, we can bring this support line right up about in here. This is going to be the new neckline where we had broke that original calendar year high from here. That was that major support line that we broke the second calendar year high. This is where we broke through it from here. We broke through it through this happily weak bar right down to that calendar bottom, and we went through and we finally got down here. Now we've had a parabolic movement up. What we're going to be looking at now is a close below the 50-week moving average of 1269, and that is the 50-week. I'm sorry, and here it is, 1253. The pink line is 1269. We're below it. We have to close above the pink line of 1269 in order to say that we're going to get up to the 1300 major wall of resistance here, where the mess really started happening back in calendar week of 724. This was that counter rally and that 4-week top. 1 week, 2 weeks, 3 weeks, 4 weeks, and kaboom. And bounce, and then that's the low of the calendar year. That was set in October of 2011. We are currently running right across here, and if we continue to stay below, meaning that if 1253 goes up to the 50-week and it hits the wall of resistance at 1270 and we hold as resistance, then we're going to go over here and start buying our put contracts. What is a 1280 put? What does a 1270? What is 1170 calls that are all making money? These were the upside calls that we had did many weeks ago, and they're all the way up here, and they still have great value. Now, on the put side of things, when we look at a 1280 put, that's what we're going to be looking at, because if we go up here and we cannot consolidate above the 50-week moving average, and that serves as resistance, we'll be looking at the 1275 call against the 1280 put, so that we can engage in the transactions. And that the $1,200 put that people have been buying into, you can see the historical volume. You can see that the volume is 21,000 on Friday, and total volume, historical volume. But look at that total volume that's been coming in on this put side, and calls. But for the most part, look at the put side. This was where the heavy puts were being bought. Open interest, $1,000 put, down there's got 10,000 volume. 21,000 of the 1,200 put, and then again our trade, the $1,200 call, that was dirt cheap, that has come up a long ways. That's the upside volatility, and that historical volume is normally right here. That's the total volume traded on Friday in the calls and the puts. We will be looking at what side of the market that we trade, long or short, is that if we come up to 1,300 and we fail, and that is the wall of resistance, and we'll start putting put side on somewhere. But right now we have a bull trend in play. We went from a bear trend of closing 4 weeks below the declining 10-week. Once we flattened out and we got 4 weeks above it, and it's rising, you go from a bear trend to a bull trend trade management. That means that stocks hit down in the volatility, but then they bounce. The indexes are much stronger than what they were. This is a weekly sell signal. That was the bottom peak of that, and as we started to move up in this moving average convergence divergence, which is a lagging indicator, bottoms were put in here, and we started ascending, and we moved up, and we took out certain resistance levels, and now we have certain support levels in the overall closing year of the S&P. Trade management is that if I close and continue to close below 1269, any up move to resistance that fails, then I'm start buying the put side of the market on the S&P. Any further continued bull move through resistance levels and rising weekly moving averages, and any drop downs, as long as I'm going to hold the lower support level, when we drop down and they mark the call side down, I'll buy the call side. That will be the trade management on the index S&P 500 call and put options, is learn how to buy at support for the S&P index call. When they mark it down, you buy. When they mark them up and they fail, you buy the put side. So call and put ratios remain at major weekly bull, short-term bull levels, because everything has changed. From now, the economy is still what it is. Worldwide is still what it is. This is a weekly technical analysis chart that big money should be moving in the market that would trigger them in. They've got the turnaround here. That's how they make decisions, using standard public technical analysis. We use a totally different system that weights the buyer and seller. It's not based on what we're telling you here, MMT. This is where the bull community should be buying the dips and selling the rips. And this is the major neckline. Anything that fails at resistance, the put side, we would transact. Any great downside to these support levels, that 20-week has flattened out. That's that red line. This 20-week, yes, right here, 20-week moving average right here. That's at 1227, 625. That's that 20-week moving average. That's where this thing has hit that dip right here. Let's blow that up. Let's take a look. That's that red line. You can see where when we broke through that 20-week, we made those highs above the 50-week. We're below the 50-week, but that 20-week has got strong support. So any drop down and they mark the calls, I buy my calls here at support. And if we go up and hit this neckline right below 1300, or if the 50-week stays there, then I start making put transactions. Whatever the bull and the bear and the buyer and the seller give us, we will take the directional movement in accordance. And we will.